Welcome to your daily stock market summary from MarketSnap. Hey everyone, buckle up because today's market action is a wild ride. We've got geopolitical tensions shaking things up big time, with the ongoing US-Israel-Iran conflict pushing oil prices through the roof and sending shockwaves across global markets. But amidst the chaos, there are opportunities and key trends for us long-term investors to unpack. Let's dive into the major moves, standout performers, and what it all means for your portfolio strategy. First up, the big story driving everything today is the escalating conflict in the Middle East. Reports are pointing to a prolonged US-Israel-Iran war, now in its second week, with severe disruptions in the Strait of Hormuz, a critical choke point for global oil supply. This has sent oil prices soaring past $100 a barrel, with some analysts warning of potential spikes to $200 if the situation worsens. The ripple effects are hitting markets hard, from Asia to Wall Street, with fears of stagflation, high inflation, and slow growth creeping back into the conversation. For us long-term folks, this is a reminder to stay diversified and keep an eye on energy exposure as a hedge against inflation risks. Let's check the major indexes to see how they're holding up under this pressure. The Dow Jones managed a slight uptick of about 0.5%, clawing back some ground after a rough start. The Nasdaq showed more strength, climbing over 1.3%, driven by tech resilience. The S&P 500 also posted a solid gain of nearly 0.9%, while the Russell 2000, representing small caps, rose just over 1%. But volatility is still king. Wall Street's fear gauge dropped significantly today, signaling some easing of panic, though the broader sentiment remains cautious. For long-term investors, these dips and spikes are noise. Focus on the fundamentals of your holdings. Zooming in on the S&P 500, we're seeing a market that's trying to find its footing after a 2% drop last week. Despite the geopolitical headwinds, the index closed higher today, reflecting some bargain hunting and resilience in key sectors. This kind of choppiness is exactly why we preach patience. Don't get swayed by daily swings. Think about where these companies will be in 5 or 10 years. Over on the Nasdaq, tech stocks are showing their muscle despite the broader market jitters. We've got some big names pushing the index higher, which tells me that investors are still betting on innovation and growth, even in turbulent times. For the long haul, tech remains a core pillar of wealth building, but keep an eye on valuations. Short-term overreactions can create buying windows. Now, let's spotlight some of the day's big winners among large caps. Tech is dominating the gainers list, with companies like Micron Technology and Advanced Micro Devices jumping over 5% each. Lam Research and KLA Corporation also posted strong gains, riding the wave of AI and semiconductor demand. Vertiv Holdings led the pack with a nearly 10% surge. Impressive stuff. These moves highlight the ongoing strength in tech, and for long-term investors, they're a reminder to have exposure to innovation-driven sectors, even if you're not chasing daily pops. On the flip side, some large caps took a hit today. Cisco Systems and AT&T saw declines of around 3 to 4%, reflecting broader concerns in telecom and tech infrastructure. Boeing also slipped nearly 3%, likely tied to geopolitical uncertainty impacting aerospace. These short-term drops don't necessarily signal a long-term problem. Sometimes they're just market overreactions, and for patient investors, they can be entry points if the fundamentals hold up. Looking at the most active stocks, Nvidia continues to dominate trading volume with a modest gain, showing that investor interest in AI leaders isn't fading. Intel also saw heavy action with a nearly 5% rise, while Petrobras climbed over 3% as oil prices fuel energy interest. These high-volume movers are often a pulse check on market sentiment. Keep them on your radar, but don't let the noise dictate your long-term decisions. Among the key market movers, Tesla and Amazon showed small gains, holding steady despite the turbulence. Netflix, however, dipped slightly, and Bank of America saw a minor pullback. These names often set the tone for broader sectors, so their stability or weakness can hint at where money is flowing. For us long-term players, it's about the bigger picture, how these companies are positioned for growth over decades, not days. Over the past week, some large caps have crushed it. Garmin led with a massive 21% gain, while AppLovin and Shopify both climbed over 14%. Occidental Petroleum also surged nearly 15% on the back of soaring oil prices. These weekly movers show where momentum is building, and for long-term investors, they're worth a deeper look, especially in energy and tech, where macro trends are at play. On the other end, Genuine Parts Company tanked over 20% in a week, while Rivian and Blue Owl Capital dropped around 14% each. These weekly losers reflect sector-specific pressures or broader market fears, but they also remind us that short-term pain can be long-term gain if you're buying quality at a discount. Turning to earnings, this week's calendar is packed with notable names. Today, we've got reports from companies like Astrana Health and United Group. Later in the week, keep an eye on heavyweights like Costco Wholesale, Viva Systems, and Broadcom. Last week, NVIDIA delivered a strong beat, reinforcing its AI dominance, while others like Henry Schein also posted solid numbers. These reports give us a window into how companies are navigating current challenges. Use them to validate your long-term thesis on key holdings. You can find exclusive earnings transcript summaries on MarketSnap to dive deeper into these results and what they mean for your investments. Wrapping up with sector performance over the past week, industrials led the charge with a 2.1% gain, followed by consumer cyclical at 1.6%. Energy also saw a huge 4.6% jump, no surprise given the oil spike. These sector moves highlight where short-term capital is flowing, but for long-term strategies, think about how these trends fit into broader economic cycles. On the weaker side, healthcare lagged with a 0.6% drop, while utilities and financial services also slipped slightly. These underperformers might face short-term headwinds, but they can also offer value if you're looking to balance your portfolio over the long haul. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stick with us for daily updates, in-depth analyses, and exclusive SWOT breakdowns to keep your investment game sharp. Hit that subscribe button, and we'll see you tomorrow for more market insights.